In this video I'll show you how we went from 7% on Drawdown to completely funded in under 5 trades on one of our challenge accounts. The only thing that we did do differently is we changed up the strategy a bit and we worked our way up very controlled. So today I will show you the trades that we've taken, I'll tell you what we tweaked, and I'll basically take you through the process we've gone through from going from 7% on Drawdown to passing phase 2 and getting a funded account. Let's hop into it. Okay, so first of all, I think it is nice to show you the trades and basically also tell you a little bit about the background of this account, of how it got into 7% drawdown in the first place. So a quick backstory. As some of you know, I like to trade a lot of challenge accounts at the same time. With a lot, I mean between 5 and 10 at the same time. I do this to spread risk, and basically by doing this, it also allows me to open up higher positions with a lot more risk than usual. So the usual trader would take 0.5%, 1% risk. We're taking 2% risk at maximum, otherwise pro firms are going to ban us, but 2% risk at max per position. So on average, our positions lose between 1.5 to 2.5% because sometimes spreads are going to be a bit bigger than accounted for. On average, we aim for that 2%. What happened is that in August and I would say September, I had a really rough month. Trading wise, also a bit mentally wise due to trading. This was just a difficult period for me. I've been performing extremely well on the 1 minute as basically for the last 2 to 3 years, but now I noticed that it was asking a lot from me mentally, and it was really blowing back on my face in September. And even though the month was not that bad percentage return wise, if I would look at the accounts, they were all on red. So I would take too much risk on some of the wrong positions. I would revenge trades, have some FOMO on some of the positions, and this really all crushed me down mentally. I thought to myself, okay, something has to change, right? Because trading is not the only thing I'm focusing on at the moment. I have other things to do and I have to have my mental capacity for the rest of the day. So what I decided to do is I zoomed out. I basically did the same thing that I was always doing, creating that story for myself, but I just zoomed out a couple of time frames, allowing me to have so much more rest in my trading, allowing me to have so much more calmness and clearness in my analysis and in my trades. Now, another thing that I started doing in my analysis, I started including the confluences and basically the analysis from the currencies on their own as well. So for example, what I was used to do, or what I think almost everyone is doing, is they're analyzing Euro USD, or they're analyzing USD JPY, they're analyzing GBP USD. But what I started doing is I started analyzing dollar, I started analyzing euro, pound, yen, NZD, odds, right, whatever. I basically reversed engineered it a little bit as I saw, okay, this is something that makes a lot more sense. And it is something that I picked up, I don't know, probably like 4 to 5 years ago when I was still trading with Astro. It's pretty much a joke right now for me that I ever joined up with that one, but that's not the case right now. I was taught this type of trading, but not really in depth by one of their traders. But when it really started clicking is when I saw some of my colleagues doing it in the Netherlands, FX Library, so big shout out to them. And when they basically explained it all made a lot more sense to me as well. So I started implementing this on my own and basically gave my own twist on this as well. And by doing this reverse engineering style, I went from analyzing pairs to analyzing currencies and then forming pairs out of those speculations from the currencies. And I have to say the last month was probably the best trading month I ever had. I felt a lot more calm, I felt a lot more controlled. It all felt so much more logical. So that's one thing we tweaked. And as you see what the results were on the account before, right? We had the first loss minus 0.5%. This was one in August, by the way. Then 1 month later, we had a 2.5% loss, a 1% loss the day after, a 1% loss the same day. As you see, I was really getting into the bad habits of revenge trading. This was, I think, also around the time that I started that 1 million funding challenge. Again, another big extra factor that caused my emotions to basically cost me a lot, because now I just needed to perform, right? I wanted to do this for you guys. And that's why there's also, I didn't want to make another episode and put the pressure on myself to basically get out of the trenches. I wanted to come back with something meaningful for you guys. I wanted to show basically the real world of trading, the downfall that I had. And I think the next video will be the 1 million in funding episode 2. But the real world behind trading, and then basically, okay, even though we incurred all of this, there is basically light at the end of the tunnel. We are now 300k in funding, right? That is something I was working on, but it's, yeah, emotionally wise, especially on that 1 minute, it really just opened up something for me. Not in a good way, right? It just put me in a place where I was not trading with the right intentions, right? I just was too much focus on that outcome, too much focus on the money. And that's never a good place for a trader to be at. Then we had a loss of 2.2%, but then it's basically started to be interesting. And this is around the time that I started switching up the strategies a bit. So it was probably around just after that loss that I had, a 2.2 loss. So it's now for the last 3 weeks or so. I took one of the first trades, and this was a very, very huge trade, and it was on Euro USD. This was a beautiful trade, if you ask me. This is Euro Pound. Let me see, Euro NZD. It was this short position. As you see, we did not hit take profit, but it was a very nice position. So we had a 70 pip stop loss, and I entered right here, and it was basically based on, okay, I see we have a bearish Euro and we have a strong NZD. Or a possible strong NZD. Days and days went by. As you see, those gray lines, they basically represent 1 day, right? Between gray line 1 and gray line 2, that's 1 day. So a lot of days went by, super different to what I'm normally trading, right? Normally I'm just on that 1 minute going in constantly. During this position, I took some other positions on EJ as well, on some other accounts. But right now I'm just analyzing the positions we've taken on this one. This was a very huge trade. Now, this right here was Monday the next week. So this was Monday the first week. Then the next week, Monday, and price came here again. And now my analysis was, okay, Euro is turning bullish and NZD is turning bearish. Even though this was a very good idea, I have to get out because the currencies are changing directions. So I closed right here. It was good for like a 1 over 1.5 hour position, something like that. And as you see, 2.8k return. The next trade was on Euro USD, and this was an interesting one. This was this one right here, 25th of October. It was actually the smaller one. So the bigger one I took on a different account. I took on the funded account, I think, actually. And it was a very, very fun trade. Dollar has been rising up very, very aggressively for such a long time. Euro has been falling for such a long time. And we basically traded into this weekly fair value gap right here. Also on dollar, I believe it was a weekly fair value gap. I thought by myself, okay, and another thing to add, we took out liquidity from this low on dollar as well. I thought to myself, this could definitely be a place where we could turn around. But again, as you hear in the language I'm using, I'm very, very careful with saying something like this to myself, as I have been burned so many times this year by thinking like that. Right now, I was analyzing the DXY, the EURX, and I thought to myself, okay, basically there's no way that the euro is not going to go down or not going to go up at this place. There is no way dollar is not going to go down. Everything was aligning. Before London Open, I entered a position, and I entered this position, and it was this one right here. As you see, this is a minus $270 loss because I entered it way too high. I was like, okay, we have news coming in. It was French PMI, I believe. In a couple of hours, also German PMI or CPI. There is liquidity going to be taken out, 100%. So I searched for, okay, what liquidity could be taken out potentially. It was this one or it was this one. I thought, okay, I don't see price coming lower than here, as I believe it is a strong low that has formed. My trade was born basically. Entry underneath the lows, stop loss underneath this low, and target. I started thinking, okay, what is the opposite liquidity we can target to take out to then potentially take euro lower again? And that was this high up here. The body candles of this liquidity high was my target. So that was this beautiful position. Now the next day, I decided to pick a scale in as well. As I thought, okay, euro definitely can go higher, and I thought it could go higher a lot actually than this one. So price dipped a little bit lower, rised above, and then made a pullback. And this is where I entered, I believe. I think it was already on this candle as I saw bullish momentum kicking in again, or it was on that pullback, but I believe it was on the rising candle already. And I basically closed it, and I was, I guess, pretty lucky because I closed it at 2.3 and my entry was at 78. Oh, I'm telling you this completely wrong. My entry was on this account. Yeah, because my entry is at 778, so it is right here. I closed it somewhere here in this consolidation zone. This was also a trade that I took, but I remember it was on a phase 2 account, I believe. I just needed like $50 and it reversed on me. That was this trade, but then of course I got out of break even, but that was this trade. Okay, so this trade was taken on this account as well. Beautiful, beautiful trade. I got out somewhere here, probably before end of day. Then we had a Euro JPY trade. Gonna be completely honest with you, a super unnecessary trade. A trade that I shouldn't have taken. It was on Monday right here, and I saw, okay, there could be some bullish pressure for euro and a lot of bearish momentum for yen still. So I thought, okay, EJ definite buy, but of course we had some imbalances right there that need to be filled, some liquidity that needed to be grabbed. So even though maybe direction wise I was thinking in the right direction at that moment, it was definitely not the right place to buy, and it was a bit of an impulsive trade as well for me to take, because it is definitely a trade that I shouldn't be taking anymore. Two fun trades right here. Euro USD and USD JPY, they were taken on basically the 29th and the 30th. And so on the 29th, it was this trade right here. Again, a beautiful trade. Euro traded above this consolidation zone. I saw it losing momentum. Also on Euro and the DXY, I saw they were ready for a reversal because I was focusing, okay, price could go lower, could take out this news wick right here, and it did. It did that perfectly, and from there it started moving up higher again. Something I didn't expect, to be honest, as well. In these cases, I always like to be rather safe than sorry. Just target these lows, even though I was expecting them to take out the lows down here. So that was a very nice almost 1/3 position. As you see, this was 3.4, but I bet I got out a little bit higher. Yes, I got out at 8.6, so I got out somewhere here. Could have let this run a little bit more, to be honest with you. Now, the day after, I took a trade on USD/JPY, and USD/JPY again, a very nice, I would say a bit of a lucky position as well, as it was again a bit of a counter trend trade. If we look back at it, the direction was definitely right, but I was just too early for this one. Now, price broke down lower, a lot of momentum to the downside right here. DXY was also ready to sell, yen was ready to buy. So I was like, okay, this is a very good place for us to sell UJ. Now, price also dipped lower right here to take out some liquidity from this news wick. And it was again a very beautiful position, but I like to say I got very lucky on this position that my stop loss was hit before we hit a reversal. And then basically phase one was passed. This was enough to bring me to 108K, $41.29, and this was phase one pass. So this brought me to stage 2, right? Stage 2, fresh 100K accounts, and I basically only needed 5K. So with the system that I'm trading, one trade can bring you there already. If you risk 2%, you're taking 2.5 R, you are there already. Again, was a trade on Euro JPY, and this time I was patient enough to sit this one out. So it was this position right here. I took a bigger position that was on a phase 2 account, and I took this smaller position on this account that we're talking about right now. Also a phase 2 account. So price started reversing right here. Again, I was looking at Euro, I was looking at yen, I saw they were ready for it, and I saw price reversing, breaking these highs, creating a market structure shift on the lower time frame. And basically this trade was already in at this big move right here, because I like to enter them not really on the pullback or anything like that, or on the fair value gap, but I like to enter them right away on that market structure shift. So I was already in on this bigger position. This trade is the one I actually took on the smaller account, or not the smaller account, on this account that we're trading or talking about right now. And I saw price pulling back to this small OB, we can say, and basically starting to consolidating again from here. So I was like, okay, I think we can go higher. This is going to be a definite buy, and they only need 2.5 R. So I took a bit of a riskier position, 25 pips stop loss underneath these lows. My 2.5 R, I gave it a bit more room just to be sure. I got in at 741, or at 661, sorry, 741 is the micro lot rate. At 661, so that's right here, and I got out at 30.04. So yeah, somewhere around to take profit. That was enough to basically pass the account. So that's a very nice 100K added to the portfolio. Sometimes, guys, if price is not going your way, or if your strategy is not working out, you just have to start thinking outside of the box and just think, okay, how can I better myself without it's going to be like strategy hopping, of course. Strategy hopping you need to avoid by all costs, but improving yourself you need to seek for every single day. With just zooming out, with just basically some confluences by analyzing the currency pairs, I think I doubled my win rate. Literally, I think I doubled my win rate over the last few months. Now it is just a new task for me, is controlling my ego, as it has been going so well. But I think that's a good problem to have at the moment. Further than that, I think we're very close to adding another 100K account to the portfolio. Also an account that really is coming out of the trenches, but it is almost there. By the way, if you want to see me doing this live every single day, check the first link in the description. We've started a group, and I'm basically sharing with you every single day a daily currency report. Something I brought to life where I'm analyzing all of these currencies, and I'm just telling you my biases and thoughts on it and the price I'm looking for to buy or to sell because of these analysis. So if that's something that you're interested in, check the first link in the description. I hope you enjoyed this video, and I will see you in the next one. Bye bye, guys.